Okay, we're in the final section of chapter 4. It's putting a financial plan together. Okay, we're going to be talking big picture financial plan and smaller picture financial plan, but primarily focused on small picture. A financial plan is basically there's a goal that we want to achieve, and we want to pay for that goal. So how are we going to raise the money? How are we going to pay for that? And how long do we have in order to achieve that goal? Okay, so I always like to say a well written financial plan should be apt. Okay, it should have an amount, a purpose, and a timeline. Okay, we want a dollar amount, why we're saving it, okay, why we have that goal, and then how long do we have to do it. Okay, so an example would be I'd like to save up $6,000 for a down payment for a car within 3 years. Okay, so saving up is the method of financing. Okay. 3 years is our timeline, and our purpose is car ownership. Okay. So it's got to be descriptive. Now, the 5-step financial planning process. It depends on what we're looking for, but the larger the purchase, the more planning we have to do. If it's a small purchase, a couple $100, then maybe we're not doing all of these steps. Maybe we're skipping some of these and only going checkbook, current bank account, or things like that. If we're doing, if we're ready to purchase a home, well, that's probably the largest purchase we're going to have in our life. So we're going to need to do many of the things on this list. If we're buying a business, we might need to do even more because there might be legal ramifications in there. But some of the first things that we should be taking a look at is our personal income and expense statement. Okay, so we want to see cash flow, what's coming in, how much is coming in, how often, and what's going out. If more money is going in than going out, then it makes the achievement of these goals a little bit more realistic. Okay, we're going to want to take a look at our balance sheet. Do we have any assets on our balance sheet that maybe we could borrow against? That could come in handy when we're taking out a loan. Personal budget. We want to take a look from month to month, year to year, what's coming in, what's going out. So personal income statements are month to month, so you could see in maybe 1 month a lot of money's coming in, but maybe if you look at your budgets going forward, you have a lot of expenses, and maybe planning for a big ticket purchase just might not be in reach right now. All right, so we're going to want to take a look at our checking account. All right, we want to make sure find out what kind of cash we have available on the side that could assist in financing one of our goals. And usually our longer term goals include home ownership, owning a business, or possibly retiring. Okay, investment accounts. What kind of assets do we have that could be liquidated for cash if we need it? Other things that could contain cash value, insurance policies. Now, if we were looking to borrow, if we're looking to borrow, people are going to want to know what kind of assets we have, but we also want to see the income that we're earning. Has that been consistent? So we want to take a look at a current pay stub. We want to take a look at previous tax returns because we want to see, is that current pay stub a one-off event, or historically have we been earning a good level of income with which to pay back any loans? Now, wills or trusts are important in case, let's say we took out a large sum of money for owning a home or buying a business. We're going to want to look at our will. Basically, when we pass, who's going to be taking over our assets, and a creditor would want to know, how they're going to get paid back, so that you might need any wills or trusts before they'll sign a contract or lend you any money. All right, we're going to need to know bring any financial contracts, anything that we purchase on credit, because they're going to have rights to some of your assets if you pass, and any other legal documents related to your finance. Okay, now, again, For every purchase, we're not doing all of this, but the larger the purchase, the more of the information gathering that we're going to be doing. Okay, now we want to take some time and analyze the information. As we've got all our finances in front of us, we want to take a look at all those old cash flow statements, all those old pay stubs. Is our income growing? Okay, is it growing faster than inflation? Okay, and what are we limited by? How much more can it grow over time? Or are we at the top of our earning potential? Now, is our net worth growing? Okay, net worth is assets minus liabilities. Now, when our net worth grows, sometimes it grows because the assets have appreciated in value. Maybe the stock market went up or your home price went up. But lower debt is usually the more permanent way to strengthen your balance sheet. So paying down debt makes your net worth go up, and it's more permanent. Okay, stock prices go up, stock prices go down. So an increase in net worth from stock gains is really on paper only, and it could be fleeting in the event of a market crash. Okay, we're going to want to take a look as we've got all that financial data in front of us. Are our spending habits changing at all? Okay, are we focused more on needs or on our wants? As our income grows up, we usually shift away from needs and focus more on wants. But as our income goes up, if we're really just primarily focused on needs, occasionally addressing wants, we'll have more freedom in our budget to put money off to the side to either repay debt or repay a loan, repay a mortgage. But sometimes we don't have the freedom to do that because other people might depend on our income. So if we get married, we have children, those children want to go to college. So those things are going to affect your short-term, more your long-term financial plan. So we have to have wiggle room in our plans to adjust for life events and new goals and things like that. Now, after we've addressed our financial picture, it looks like the financial picture is good. What are the things that we want to do? So when we're talking about goal setting, and we did an exercise on this before break, we want to know what our personal goals are. What are the things that we want to achieve? Okay, and if we can identify those, most of those goals that we want to achieve, they're not free. So the financial goal is how we're going to go pay for those personal goals. Okay, so let's say I wanted to go back to school, get another degree. Okay, I have to figure out how much am I going to need to do this? Am I going to borrow to pay for this? Am I going to slowly save over time to pay for this? Am I going to sell something in order to raise the capital for that? So once we know what our personal goal is, we can use that information to figure out how we are eventually going to pay for that personal goal. Okay. Now, one of the more important things here is the timeline. Okay, after we've done all the things above, we want to develop a timeline. The more time we can give ourselves, so the earlier we start preparing for one of these life events or one of these personal goals and how we're going to pay for it, the more time we have, the easier. Okay, because we were working prior on monthly budgets. Okay, we're going to use this information to add a line item to our monthly budget in order to get these things paid for. So what we're going to do is we're going to once we figure out the total amount of money that we might need, we're going to divide it by the number of months we have to achieve that goal. Okay, so you can see in a quick example here, if I'm looking for $6,000, let's say for that down payment for a car, if I have 1 year to do it, all right, 6,000 divided by 12 means every month I'm going to need to put away $500. Now, depending on where you are in your career, $500 might be difficult to do. All right, as your income goes up over time and you can manage your finances a little bit better, maybe $500 isn't a big deal and it's easy to put aside. But you can see that if you have that same numerical goal, but you plan for it in 4 years. Well, 6,000, 4 years, 12 months a year, that's 48 months. 6,000 divided by 48, that's only $125 per month. And that's pretty easy to work into a monthly budget. Okay, so the more time we give ourselves, the easier it's going to be to finance. And in most months, you might be able to get $500, no problem. But if you ever have those one-off events like blow out a tire, have to go to the ER or anything like that, that could disrupt this plan. So over time, if you make it a little bit easier goal to achieve, some months we might be able to put in a little bit more than the 125, because of course some months we might not be able to put in any of the 125. Okay, now after all that has been put together, we want to implement the plan and evaluate the plan. Okay, so once the plan's been put in motion, it shouldn't be static. We should come back and check on it. Like I was saying before, we had the plan. We were putting $6,000 away. We want 4 years to do it, 48 months. So it's $125 per month. Well, maybe during that time we get a raise, so we can put more money in the account per month, and get to that goal quicker, or maybe get to a larger goal and get maybe a nicer car in that 4 years. So once the financial plan has been put on paper, it shouldn't just sit in a drawer and be static. We want to keep coming back, checking on it, seeing how we're doing, or seeing if there's ways maybe even we could put that money into an interest-bearing account, and again have the interest help us get to that goal a little bit quicker. Okay. All right. There's going to be a quick Google form that is going to follow this. Very short activities planned for today. Enjoy your Friday, and I will see you again next week.